I'm here today with dotdigital Group CEO Milan Patel and CFO Paraag Amin to discuss the full year 2020 results. Milan, how do you feel about the performance in the year? And can you talk us through the highlights?
Yeah, I think overall I'm really pleased. We continue to deliver that double-digit growth for the year based on a combination of things. One, existing client spend has continued to increase, winning new business and substantial uptake of our omni-channel offering. So all in all, a really strong set of results given the outbreak of COVID at the beginning of the fourth quarter. On COVID, while we haven't been immune to its impact, we have been able to adapt very quickly and smoothly and have been fortunate in the trading. It has continued to hold up. We only saw a slight slowdown of new business in April, but we've continued to see that going upwards back to close to normal levels now. In terms of what we always talk about, looking at our three pillars of our strategy for organic growth, we can continue to see significant progress against each of them. On the product innovation front, we continue to focus on how we can make better use of data, AI, or artificial intelligence, and machine learning as marketeers get more sophisticated in engaging with their customers. Also, building out that omni-channel offering with features like live chat. Given the heritage of the business where we were email only, we continually see customers adding more in terms of channels that they're using. And we have circa 20% of our customers now using 3 or more channels. We made good progress on the strategic front, the biggest being Magento, BigCommerce, Shopify, and also in the CRM space, the Microsoft Dynamics and Salesforce, which are really vital for us in raising brand awareness in the different regions that we operate in and the verticals that we also operate within. Sales through connectors were up 10% for the year, and the investment we continue to make in deepening those relationships and optimizing our integrations for our marketeers really stand us in good stead for the future. In terms of expanding our international footprint, we've continued to see global adoption of our platform. Sales across the regions were up, with revenues from outside of the UK now constituting 31%, which is up from 29% in the year before. That's continuing to deliver on our vision to diversify more revenues outside of the UK. To support that, we've also brought in some great talent to really help build out our international hubs. And while we've achieved a lot in solidifying those foundations, in many ways it feels like we're still only scratching the surface.
Can you tell us a bit more about the impact of COVID and how you've fared as a business?
I think it's fair to say we traded well through COVID, demonstrating the resilience of our business model and teams. Being a digital business, we were able to really move quickly with very little impact in our operations across the globe. We were already set up working remotely, so the transition was smooth and quick. In terms of the impact on trading, as I mentioned before, there was a brief slowdown in new business back in April, with some of our prospects' priorities understandably shifting at the onset of the pandemic. At the same time, we also saw a reduction in churn, which helped partially offset that. And the trading then went on to improve on a monthly basis through to the end of the financial year. The benefits of a sector and geography agnostic platform have never been more apparent than during this pandemic. Some of the end markets were hit harder than others, but the diversity of the customer base that we have, combined with a disciplined approach to cash collection, provided us with a strong financial basis. I also want to give a special mention to our staff who have responded brilliantly to the changes brought about by COVID. It's thanks to them that we've done really well through this period, and I'm really grateful to each of them for their contributions. I'm really pleased that the continued demand for our product has meant we've been able to keep everyone and not have to furlough anyone on the team. We're encouraged by the fact sales momentum continued to grow, as evidenced by the upgrade to our revenue guidance last month. Of course, it's difficult to predict how the pandemic will play out, but with the demand holding up and having successfully navigated it to date, as things stand, we feel confident about our prospects.
What is the current state of the market and what impact has COVID had?
It's clear that lockdowns and travel restrictions have accelerated the general trend towards digitalization. Digital has been growing as a proportion of overall marketing spend for a while, but the pandemic has meant businesses in virtually every sector have been forced to pivot more aggressively towards it to maintain effective communications with their customers and keep winning business. Email has taken on an increasingly significant role, and we've seen an increased uptake of omnichannel, with businesses keen to increase the number of touch points with customers and prospects to strengthen relationships and build up engagement, and try to buck the trend of reduced customer spending. SMS revenues have increased, and we've seen an uptick in the number of customers using our real-time messaging capabilities. We've also seen a general increase in demand for data-driven capability, which is something we continue to invest in heavily and see as a big part of our future. We're continuing to see relevancy in targeting at the highest priorities of our marketeers. Marketers will continue to adapt as COVID plays out, both from a business model perspective, but also how they're engaging with their customers. But the level of demand we've seen for our products really shows how much importance they attach to our platform, which has proven its resilience in difficult times and gives us a lot of comfort that we're doing the right things.
Parag, can you give us an overview of the financial performance in the period?
We delivered record group revenue of £47.4 million for the year, and this is despite the impact of the pandemic in the fourth quarter. We finished the year with revenue growth of 12% versus the prior financial year. Within that, recurring revenues increased to 91% of group revenue from 89% last year, and of this, 90% is contracted, demonstrating the strength of our business model in providing great visibility. Recurring revenues derived from licenses and data, which we define as functionality revenue, grew by 16% to £14.4 million. This emphasises the value of our R&D programme, into which we invested £6.5 million in the year, up from £5.5 million last year. As we look further down the P&L, gross margin for the period was 87%, which is down slightly from the 90% last year, but this is due to the growth of non-email messaging channels, and in particular SMS, which is slightly lower margin product. Adjusted EBITDA grew 24% to 18.2 million in the year, and adjusted operating profit was up 11% to 13.1 million, which is a 28% margin. Due to a higher rate of tax of 6%, adjusted EPS came in at 3.79p, down from 3.88p last year. So lastly, the company maintains a strong financial position with net cash at the end of the year of £25.4 million. This was up 32% from the 19.3 million at the end of the prior year, and the company has no debt.
Milan, what's the outlook for the group?
As reported in the update on trading we issued in October, the new financial year has started well. Sales momentum has been good, driven largely by existing clients spending more, new customers coming on board, and strong take-up on non-email channels. We know we're operating against a backdrop of sustained macroeconomic uncertainty, and we're under no illusion about the challenges we'll need to overcome to meet our targets this year. That said, the model has proven how resilient it is, and with good revenue visibility and continued strong cash generation, we feel we're in a healthy position and are confident in our ability to deliver. Our balance sheet is in excellent condition. We have no debt, and we intend to reinvest some of that cash back into the business to make sure we continue to grow sustainably and profitably for the foreseeable future. I'd like to take this opportunity to really thank our shareholders for their continued support and look forward to updating them on further progress in due course.